Call it the summer stumble. It doesn't really qualify as a swoon. It's certainly not a full-fledged sell-off just yet, but for the third day in a row, U.S. stocks fell, dropping like dominoes after overseas markets sold off. Japan, notably, declined 4% as the yen rose against the dollar. Here in the U.S., investors seemed unsettled by recurring Fed chatter, indicating the central bank may scale back its stimulus programs as soon as September, or not. And if not, then probably by the end of the year. Either way, investors didn't much like it. The Dow dropped 48 points to 15,470. The Nasdaq dipped 11 3/4 to 3654, and the S&P 500 closed down 6.4 points at 1690 and change.
And there's also this other bit of Wall Street history. Since 1987, August has been the worst month for stocks. So what should investors do? Joining us with his thoughts, Andres Garcia-Amaya. He's global market strategist at JPMorgan Funds. So, Andres, this goes with the calendar. There's this summer lull. What's the smart thing for investors to do? Do you buy? Do you sell? Do you just sit tight?
You know, I think for the active investor, for the short-term investment horizon, no one wants to be a hero, especially this August, considering how strong the markets have rallied. Having said that, if you're a long-term investor, I think months like this do open some opportunities. For instance, if you look at European equities, we do think that they've underperformed the U.S. equity market, and their economies are not in good shape, but they're going from really bad to just bad. And that type of momentum is what you look for to try to generate some outside returns in the years to come.
How much of a typical investor's, and I realize, Andres, there is no such thing as a typical investor, but how much of a typical investor's portfolio ought to be in U.S. securities versus those overseas securities that you just referenced?
Yeah, I think that's a great question. I think it matters what your risk aversion is. What I mean by that is European equities are going to be more volatile. There is more uncertainty, not only about their economy, but about their earnings. That's one of the reasons that I think there will be a higher expected return. Having said that, if you look at the U.S., earnings are not growing very rapidly, but there is more certainty about them. There's a little bit more visibility. Therefore, volatility we don't expect to be as high as European equities. So it depends who the investor is. Having said that, between those two, I think at this point, European equities do offer a little bit more opportunity on the upside.
You know, the last time you were on, we were talking about emerging markets, and you were kind of cool to the countries like Brazil and Russia, India, China. How about now? And we heard in this latest earnings season some mixed reports from CEOs talking specifically about growth opportunities or the slowdown in China. Is this an investor opportunity, or is it too soon?
I think unlike August here in the United States, where it is a bit of just a soft patch when it comes to everyone's just at the beach, in China, the cool off could actually last not just for the summer, but it could really go well into next year. So I don't see it yet, just quite yet, the opportunity there. Although valuations have come down, I think we're not quite at a place that I feel comfortable becoming an overweight in China.
What do you make of this little stumble that we've had here for believe it or not, 3 days in a row of U.S. equities sliding just a bit? But I gather your view, medium and long term on the U.S. economy is pretty good, and hence for U.S. stocks as well.
Sure. I think the catalyst for the recent run up to really last week had been earnings. Earnings have not only met expectations, but really beat them. And that catalyst is drawing to a close. We're almost done with earnings season. And I think at this point, I wouldn't read too much into the daily volatility of the market because volume is very low. Come September, I think everyone will come back to play, and that's really going to dictate where the rest of the year goes for equities.
There's something about September. There's this mentality of getting serious again, back to school, whatever. I mean, the theme so far this year for most investors is buy now and sell higher later. Do you see that theme changing come September?
Yeah, I think that if you have to take a step back and say, if I have a new dollar, where do I think there's the best place to put it? And we still think equities offer more value than fixed income. No matter if it's August or September, that's still our thesis. And this is really a thesis that we think is going to go on for years, not just months.
Very quickly, you talked about maybe dabbling in some European stocks. I think most of individual investors wouldn't know how to pick a U.S. stock. Certainly I wouldn't, let alone a European stock. Is the best way to go through a fund or an ETF?
I think you have to be very selective, especially in Europe. For instance, we might like German autos, but we don't like German banks right now, right? So I think within those sectors, you might want a specific stock over another. So active management is very important. I think you need professional help. To your point, it is very volatile, and you better have some hand-holding along the way to make sure that you pick the right companies.
Thanks for some hand-holding tonight, Andres. We really appreciate it. Andres Garcia-Amaya at JPMorgan Funds.